Hey guys, it is Julie here with TipRanks. Today we are shifting our focus up north and looking at a group of companies that are known for their stability and incredible dividend track record. We are looking at Canada's Big 5 banks, so let's get into it. Alright guys, welcome back and thank you all so much for being here. Like I said, today we're discussing the Big 5 banks of Canada. These are great, reliable, long-term holds with a very strong dividend track record. Of course, I am a little biased towards this sector. For those of you who maybe didn't know, I am Canadian, and before moving down here to the United States, I spent a lot of time in the financial world in Canada, spending 8 years working for one of these large banks, so it is an industry that I know fairly well. Now, some of you might be wondering, what is the point in looking at Canadian banks versus banks here in the United States, where there are plenty? But Canadian banks are definitely known for their stability. When we look at the last 180 years, the United States banking system has had 14 different crises, with the last being in 08-09. Comparatively, Canada has only had 2 crises, with the last being in 1839, so 170 years ago. Stability in the Canadian banking system comes from heavy regulation and market concentration. This is derived mostly from legislation like the Canadian Bank Act. In Canada, there are 85 different banks, compared to nearly 5,000 banks down here in America. And Canada's top 5 banks control a whopping 89% market share, whereas America's top 5 banks only control about 35%. Anyways, with those fun facts out of the way, this is your friendly reminder that if you enjoyed today's video, hit that thumbs up button and make sure that you're subscribed to the channel as well. Now, let's get right into our Big 5 banks. We're going to start off with Canada's largest bank by market capitalization, with the Royal Bank of Canada. Their stock trades under the ticker RY and is currently priced at $99.60 per share. The Royal Bank was founded in 1864 and has been paying a dividend since 1870. We're talking more than 150 years. They pay a quarterly dividend, with the last being paid on November 23rd. Yesterday, following their earnings report, they announced an increased dividend of $1.20 Canadian, or about 94 cents American. Their dividend yield comes out to about 3.6%. The next payment will be coming up on February 24th. RBC's vision is to be among the world's most trusted and successful financial institutions. They are a market leader in Canada and one of the top 10 largest global banks by market cap, with operations in 29 countries. They have over 86,000 full and part-time employees who serve over 17 million clients, and they've been named North American Retail Bank of the Year for 3 years in a row. As I mentioned, RBC just released their latest earnings report yesterday on December 1st. Their net income came in at $3.9 billion, which was up 20% year over year. Their adjusted diluted earnings per share came in at $2.71, up 19% year over year. Their revenue increase was driven primarily by wealth management and Canadian banking. The Royal Bank stock currently has 5 analyst ratings and comes in as a moderate buy based on 3 buy ratings and 2 holds. The average price target comes in at $113 for an upside potential of nearly 14%. And most of our analyst price targets are fairly close together. On the low end, we have a hold rating with an upside of nearly 11%, and on the high end, buy ratings with an upside of over 16%. Second up is the Canadian Bank of Commerce, also known as CIBC. Their stock trades under the ticker CM and is currently priced at about $107 per share. CIBC also has an impressive track record when it comes to dividends. They haven't missed a payment since their first dividend back in 1868. They also pay a quarterly dividend, and their earnings report just came out today, so that new dividend isn't reflected here yet, but it comes out to about $1.26 for a dividend yield of about 4.35%. The next ex-dividend date is on December 29th for payment on January 28th. CIBC is a leading North American financial institution, and their 44,000 employees provide a full range of financial products and services to 10 million clients in Canada, the US, and around the world. With total assets over $837 billion, their goal is to deliver superior client experience and top-tier shareholder returns while maintaining their financial strength. And like I said, they just came out with their latest quarterly earnings report today on December 2nd. Looking at fiscal 2021, they met all of their medium-term financial objectives. Revenue came in at $20 billion, which was up 7% year over year, and adjusted earnings per share came in at $14.47, which was a 49% increase year over year. Their stock has 4 current analyst ratings and comes in as a strong buy based on 3 buys and 1 hold. The average price target comes in at $127.55, which will be an upside potential of 19% from current prices. On the low end, we do have a buy rating with an upside of nearly 15%, and on the high end, we have our hold rating with an upside of over 22%. Third, we have the Toronto Dominion Bank, or TD. Trading under the ticker TD, their stock is priced at $74.44. You're probably starting to sense a pattern here, but TD also has been paying dividends for a very long time, with their first dividend payment dating back to 1857. They also pay a quarterly dividend and also just released their latest earnings today on December 2nd, so that new dividend is going to be around 69 cents per share for a dividend of about 3.7%, with payment coming up on January 31st. As a top 10 North American bank, TD aims to stand out from its peers by having a differentiated brand. The TD framework embodies their culture and guides their behavior as they execute on their business strategy of being a premier Canadian retail bank, a top U.S. retail bank, and a leading wholesale business aligned with their retail franchise. TD's expansion into U.S. banking over recent years has helped make it one of North America's largest financial institutions. They now have over 26 million customers worldwide, with over 15 million active online and mobile users. Looking at their recent earnings report, which included fiscal 2021, they have reported earnings of $14.3 billion, up 20% year over year, and earnings per share of $7.72, also up 20%. The TD stock has 8 current analyst ratings and comes in as a moderate buy based on 4 buys and 4 holds. The price targets are a bit more modest here, coming in at $76.30 for an upside of 2.5%. And analysts are definitely a bit more divided on this one, with recent ratings coming in with a slight downside, just over 2%, and our high-end target being a buy rating with an upside of nearly 15%. Fourth on our list today is the Bank of Montreal. Their stock trades under the ticker BMO and is currently priced at $105 per share. Now, BMO holds the record for the longest running dividend payout for any company in Canada. They started paying out in 1829. That is a record of 192 years. It is also the second longest record for any company on the New York Stock Exchange. Paying a quarterly dividend of 83 cents per share, their current dividend yield comes in at 3.45%. The last payment was on November 25th. Their earnings is coming out tomorrow, so we'll see the new dividend news then. BMO operates 3 different groups with their personal and commercial banking, BMO Wealth Management, and BMO Capital Markets. They had over $971 billion in total assets. They are the 8th largest bank in North America by assets, serving 12 million customers globally and 8 million customers in Canada. Their Q4 earnings and fiscal 2021 is coming out tomorrow on December 3rd, but we can look back at their Q3 earnings report from a few months ago. There they saw a net income of $2.3 billion and year-to-date at $6.4 billion. Their adjusted net income has been up 79% year-to-date. Adjusted earnings per share came in at $3.44. The BMO stock has 5 current analyst ratings, coming in as a strong buy based on 4 buys and 1 hold. The average price target comes in at $115.92 for an upside potential of 10%. On the low end, we do have a buy rating from last month with an upside of 3.4%. On the high end, we have a price target of $125, which would be a growth potential of nearly 20%. And last, but certainly not least, we have the Bank of Nova Scotia, also known as Scotiabank. Trading under the ticker BNS, they're currently priced at $65.77. Bank of Nova Scotia just misses BMO's dividend-paying record by 3 years. They've been paying out since 1832. They pay a quarterly dividend and just recently announced the latest dividend, which will actually be about 78 cents per share, with a dividend yield of about 6.2%. The next payment will be coming up on January 27th to shareholders of record as of January 4th. Scotiabank is a leading bank in the Americas with a broad range of advice, products, and services, including personal and commercial banking, wealth management, and private banking. They have a team of approximately 90,000 employees and assets of $1.1 trillion. They are a top 3 bank in Canada and top 5 bank in the Pacific Alliance. About 94% of their earnings come from the Americas, and their unique Americas footprint provides a diversified exposure to higher growth and higher ROE banking markets. Taking a look at their fiscal 2021 financial performance, their net income came in at $9.95 billion, which was up 45% year over year. Diluted earnings per share came in at $7.87, which was up 47% year over year. The Scotiabank stock comes in as a strong buy based off of 8 analyst ratings with 6 buys and 2 holds. The average price target comes in at $71.32, which would be a growth potential of about 8%. On the low end, we do have our couple hold ratings with a slight downside of 0.2%, and on the high end, we have our most recent rating at $77, which would be growth of over 17.5%. So there we have a quick overview of Canada's big 5 banks. Now, personally, I think these stocks are a great addition to any portfolio. They provide a great source of dividend income and that nice slow and steady growth. And they'll also give you a bit of geographical diversification. But of course, I always love hearing from you guys. So let me know your thoughts in the comments down below. Have you dabbled in these Canadian bank stocks before? And which is your favorite out of the group? Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.